In today's video, we'll spend some time taking a look at market internals, specifically the NYSE tick. The tick is a built-in market internal inside of thinkorswim, and in today's video, we're going to be using our cumulative tick indicator to spot potential trend exhaustion. Now I'll show you examples, but in order to follow along, these are the indicators that you may want to download ahead of time. For all Volatility Box members, I would suggest downloading the Cumulative Tick Pro indicator. The Pro version has the signals which we'll be discussing in today's video. In case you're not a Volatility Box member but you'd like to follow along, you can download the free version of the Cumulative Tick. It is a little bit more baseline, but I can show you what the differences are between the two, along with the same patterns that you should be looking out for. One other indicator you might find useful, though not necessary, is the supply-demand imbalance indicator. This is also a free indicator for everyone, and this will give you an idea of how those imbalances were building up all the way until the cumulative tick actually gave us the signal that, hey, we now think trend is exhausting. Now, for all folks who are interested in the Volatility Box membership, here's a link to learn more. We have two different memberships, a futures membership for those of you that trade either futures, micro futures, or specifically the indices. And we also have a stock membership for those of you that focus more on stocks. We support 10 or 11,000 now actually, and this is more useful for those of you that are stock traders or options traders really looking to scan a much bigger universe of potential symbols. All right, with that, let's dive into our charts. We'll focus in on a chart of the S&P 500, and I'll show you what each one of these market internal signals was telling us today. Now, coming inside of our thinkorswim chart, I have a chart of the S&P loaded on here. It's the SPY ETF. And in terms of indicators, I have the three indicators we just discussed. I have the supply demand edge indicator where I have just the ticks showed. I have turned off the AD spread. I have the cumulative tick pro indicator for all Volatility Box members. And I finally have the free version of the cumulative tick. Now let's start by going straight down the line, starting with our supply demand edge indicator first, and see what that was telling us in the morning here. Now, really starting 7:10 a.m. Pacific, so about 40 minutes after the market opened, we had our first imbalance indicator plot telling us that, hey, price action is making a higher high, but the ticks are no longer making a higher high. So this move isn't being supported by the level of buying strength that we would expect. We're starting to see our first little sign of a divergence there. Now, this was just our first arrow. As the day progressed, really the morning progressed, we had a total of 9 arrows that plotted. 1, 2, 3, 4, 5, 6, 7, 8, and finally the 9th arrow that plotted right before the lunchtime hour at 8:40 a.m. Pacific, so 20 minutes before the East Coast lunchtime hour begins. That was the last tick divergence indicator that we saw using our supply-demand imbalance indicator. Now we move on to the cumulative tick pro indicator to see what information that was giving us in terms of market internals. There, across the day here, the cumulative tick continued to keep track of how the ticks were changing, but we had 3 different signals that presented themselves. We had a buy signal early in the morning. This was at 7 a.m. Pacific as we broke above our opening range. So that was the very first buy signal. That led to the rally, which we already discussed. We started to see imbalance signals of as the morning progressed. We then had a sell arrow. And that sell arrow took place 10 minutes after our last imbalance arrow plotted right here. That was at 8:50 a.m. Pacific, and our last imbalance arrow was at 8:40 a.m. Pacific. So now we're starting to see signs of this exhaustion where price is making higher highs, but the tick is no longer making higher highs. We now even have our cumulative tick indicator telling us that, hey, we now have a sell signal here where we expect price action to take a pause. The internals are no longer supporting this move. And if we take a look to see what happens after we have this signal plot right here, the cumulative ticks make a final push up, but this time we have a very clear divergence. The cumulative tick is going up, but price action going down. Now, after that signal, we entered the lunchtime hour. As we've already discussed earlier last week, actually, the initial period of the lunchtime hour, a whole lot of chop. Towards the end of the lunchtime hour here is where we saw the selling take place inside of the S&P 500. So now the market internals giving us that bearish signal, taking us all the way down until ticks again try to begin climbing towards the end of the day. And our last buy signal was at 12:15 p.m. Pacific, so 45 minutes before the close. And And if we take a look at what happens inside of price action here, a very small rally into the close, nothing anywhere remotely as lucrative as, say, the morning rally, where we actually had stronger ticks supporting that move. You can also see that with our cyan line right here, suggesting the ticks are climbing, compared to towards the end of the day here, we don't really see that same level of cyan strength here. Instead, we see cyan to gray, suggesting the ticks and the internals are starting to lose steam with regards to the buying activity. So to summarize all three indicators, and really these two are the ones I'll focus in on, the cumulative tick gives you similar information, but you don't have the very clear signals here. So if we use the signals to make sense of the day's activity, we had initially our first buy arrow early on in the morning that also coincided with our opening range breakout to the upside. We had that move take place with buyers initially supporting this. We started to see our imbalance arrows starting to plot, suggesting that, hey, the tick is no longer making higher highs. The arrow stopped plotting here for a bit, however, started plotting one more time with the final signal at 8:40 a.m. Pacific. 10 minutes later, the cumulative tick pro indicator gives us the sell side signal. Once we have the sell side signal, we see the last little divergence here with the cumulative ticks making slight higher highs, but price action making lower lows. We go through the lunchtime hour, most of it with chop, until towards the end of the lunchtime hour, traders coming back to their desk. That's where really a majority of the selling took place today inside of the S&P 500. The last signal that we saw was towards the end of the day, 45 minutes before the close, and that's where we had our slight little rally into the close, but again, nowhere close to the rally that we saw earlier on in the day with our morning activity here. Alright, I hope this video helps those of you looking to make sense of all of the different market internal indicators that we have. We use the supply demand edge indicator and the cumulative tick pro indicator here for really the two different sets of signals that we see. For those of you looking to still have some version of the cumulative tick for a running count of how the internals change throughout the day, spot some of those divergences yourself manually, that's where you can use the cumulative tick version, which is a free version available for everyone. I'll leave a link to all three indicators in the description box as well for those of you that would like to download and play around with this in your own platform. Take care everyone, good luck trading, and I'll see you in the next update.